DeepSeek AI just changed the game. What it means for the economy.
DeepSeek AI just changed the game. The AI revolution is happening faster than we ever imagined. This weekend, a major breakthrough in AI training costs was announced, shaking up the entire tech industry. DeepSeek, an emerging AI company, has reportedly achieved similar performance as top AI models, but at a fraction of the cost. Could this mean the AI boom will slow down, or are we about to see a new wave of economic growth? Let's break it down. Back in 2023, analysts predicted that AI investments would reach 2% of annual GDP. Starting with a massive surge in hardware spending, companies poured billions into training advanced AI models, expecting long-term growth. The assumption was simple. Hardware investments would eventually slow down as computing costs dropped, while AI software investments would steadily rise as businesses adopted AI into daily operations. So far, this has mostly played out as expected, but much faster than anticipated. Now, with DeepSeek proving that AI models can be trained at a fraction of the cost, the game is changing. The question is, what happens next? One major concern is that cheaper AI training costs could reduce overall AI spending, leading to lower capital investments in hardware. If AI-related capital expenditures, or CapEx, start to decline, it could impact tech companies that rely on high AI infrastructure spending. We have seen this pattern before. When new technology reduces costs, some companies benefit while others lose revenue. Just think about what happened with cloud computing. When companies moved from traditional servers to cloud infrastructure, IT spending changed dramatically. Now something similar could happen with AI, but here's the twist. AI investments have not actually been that significant in official GDP reports so far. That means that even if investment slows down, it will not drastically impact overall economic growth. In fact, some analysts believe that DeepSeek's breakthrough could actually increase real hardware spending as big tech firms rush to upgrade their AI models to stay ahead. While some fear AI investment might slow, there's actually a bigger upside to this breakthrough. If AI costs drop, more companies can afford to develop new AI-driven platforms and applications. Right now, the biggest barrier to widespread AI adoption is not cost, it is usability and integration. But if cheaper AI models encourage more businesses to adopt AI, we could see a major boost in productivity and economic efficiency. Think about it. AI automation, advanced analytics, and machine learning could help industries like healthcare, finance, manufacturing, and customer service run more efficiently. And if AI adoption spreads faster due to lower costs, the overall economy could benefit from higher productivity and innovation. Let's take a look at some real-world examples of how AI cost reductions could impact different industries. In healthcare, AI-powered diagnostics are already reducing the time needed to detect diseases like cancer. But high costs have prevented hospitals from fully integrating AI-based systems. With cheaper AI models, more healthcare providers could adopt this technology, improving patient outcomes globally. In the finance sector, AI-driven trading algorithms and fraud detection systems have already transformed banking. But now, smaller banks and financial institutions could access this same technology at a lower cost, making AI-driven finance more mainstream. And let's not forget the impact on content creation. AI-powered tools have already changed how content is produced. If AI models become even more affordable, independent creators and businesses will have access to advanced AI tools that were once limited to major corporations. Now, let's talk about global competition. Until now, most leading AI models have been developed by US-based companies like OpenAI, Google, and Meta. But with DeepSeek's success, we might be seeing a new AI superpower emerging. This could drive AI adoption in emerging markets and create stronger competition between nations investing in AI research. Some analysts believe this could push governments to ease AI regulations and increase investments in AI infrastructure to maintain their global standing. In other words, competition between AI developers could actually accelerate AI innovation and adoption worldwide. Countries that were previously lagging in AI research now have the opportunity to catch up, leading to a more competitive and diverse AI market. But what about AI infrastructure companies? If training costs fall significantly, will they still capture an outsized share of the revenue? Some believe this shift could pressure AI chip manufacturers and cloud computing providers, but others argue that as AI adoption increases, total hardware spending could still rise, even if individual model training becomes cheaper. The real question is, how will companies adapt to this changing landscape? For companies developing AI software, the race is now about delivering real-world applications that businesses and consumers can use daily. Lower training costs could make AI more accessible, but competition will drive the next phase of AI development. We could see a surge in AI-powered business tools, automation systems, and consumer applications. This could be the moment when AI shifts from an experimental technology to an everyday necessity. And there is another major factor to consider: regulation. As more players enter the AI space, governments will have to address key questions around data privacy, ethical AI development, and economic impact. Will regulations tighten to prevent misuse? Or will they loosen to encourage faster adoption? Many countries are still figuring out their stance on AI policies, and DeepSeek's breakthrough could accelerate these discussions. So what does all this mean? In the short term, AI hardware investment might slow as costs drop. But in the long run, cheaper AI models could lead to faster global adoption, more competition, and major productivity gains. DeepSeek's breakthrough could be the push that moves AI from experimental to essential in industries worldwide. Now, we want to hear from you. Do you think cheaper AI models will help businesses adopt AI faster? Or will it cause AI investment to slow down? Drop your thoughts in the comments. If you found this analysis useful, do not forget to like, share, and subscribe for more insights on AI, finance, and the global economy.